Hello, my friends. Spencer Nelson and Brian Hunsaker from our North Salt Lake City office, headquarters of Iron Gate Global Advisors, filling in for Brett Pattison.
You're doing a great job.
Thank you. I appreciate that. That makes me feel good. So, the reason why we're doing the podcast today and Brett isn't with us is Berkshire Hathaway annual meeting. Brian, myself, and Dan Bell ended up going back to Omaha, eating some incredible barbecue in
Wow.
Kansas City.
Best barbecue I've ever had.
If you have questions about where to find the best ribs, email Brian or myself and we will tell you. But phenomenal barbecue and then incredible meetings at Berkshire in Omaha. Had a great time, and we wanted to give our key takeaways, kind of what we took from the meetings there at Berkshire. And I've kind of separated them out more philosophical and then practical takeaways. The very first overlying thing that I want to just talk about, and I want Brian's comments on, I think I underestimated the brand of Warren Buffett and Charlie Munger. That was something that I knew they're famous, knew they're popular, but when you get there, you realize that Warren and Charlie are a brand.
They are. Yeah. And I really wanted my business partners to go to Berkshire. And last year, I think we've been talking about it for a couple of years.
Yeah.
And finally, we pulled the trigger. And I got Spencer and Dan, and Brett wasn't able to go, but it was really good. I wanted my business partners to really understand. I've understood this for a long time. I've been an investor and a shareholder in Berkshire for over 20 years, and so I'm glad that you're able to go. I think it's a one. Yeah, Charlie and Warren are brands unto themselves,
They really are.
but also I think you come away from the meeting with a lot of confidence in the management there.
Mm-hmm.
Not only Warren and Charlie, but their successors, and we know who those successors are today. So, yeah, it was a great meeting.
Yeah, in the first meeting, Greg Abel was up there, and then why can't I think of insurance guy?
Ajit Jain.
Yeah, Jane was there, who runs the insurance, and they took a lot of questions along with Warren and Charlie. And yeah, I think investors, at least the feeling from the meeting was there is a lot of confidence in that next generation of of Berkshire Hathaway leaders.
Yeah, let me talk just a little bit about just the succession, because people always ask what's going to happen to Berkshire after Warren and Charlie are gone.
Yeah.
Charlie's 99; he'll be 100 on January 1st, and Buffett's 92.
Yeah, and for our listeners, the funny thing was they started the whole meeting out with a movie, and one of the satires of the movie, they went back to like 1990, 96, 98, 2000, and the question continuously came up, well, what happens if you die? What's going to happen? And they kept giving the same answer and the same answer, and slowly but surely, obviously, we're 30 years later from when they were asking those questions. So they were in their 60s and 70s, you know? Anyway, continue.
Well, that really is the biggest question most people ask. What happens when Warren dies? I mean, I think that's the most common question I get about Berkshire. But we already know what the succession plan is. The operations of the business will be Greg Abel. And in fact, Greg Abel is the COO. He's running a lot of the businesses himself. Buffett is over investments, and he's still running the bulk of the investments. But he brought on two really sharp, experienced investors several years ago, Todd Coombs and Ted Weschler. And they are both, in and of themselves, great investors. And I have a lot of confidence in both of them. So I don't think Berkshire's going to miss a beat. You know, there's only one Warren Buffett, but Berkshire will do very well with those two guys running the money.
Talk a little bit about, I don't think a lot of listeners probably understand the insurance side of Burke as much, and specifically Ajit Jain, how
Yeah.
important he is to the equation as
Well,
well.
Buffett says that Ajit has probably created more value for Berkshire than anybody, including Buffett himself.
Hmm.
And it's partly because of the business model of Berkshire Hathaway. They're a big reinsurance company. They bought a company called National Indemnity years and years ago. In fact, they talked about that
Yeah.
story It's really a funny story. We can talk about it some other time, but he just got lucky and ran into Ajit Jain. I think on the street, or he
He
introduced
talked
himself.
about the
Yeah,
meeting, and then he came in and he requested a meeting with him or something like that. And the minute he was like,
he
"We've
says,
got to have this
"Oh,
guy."
this guy is incredible. He's just
Yeah.
really sharp and very smart." And the secret sauce of Berkshire and why Ajit's been responsible for creating so much value over time is it's called float. It's called insurance float. And you think about an insurance company. Insurance companies take in premiums, but the premiums they take in generally, well, the insurance company can hold that money until they have to pay out their liabilities or responsibilities on insurance claims, and that can take years and years, sometimes decades, before that money goes out the door. So it's a very stable, uh, uh, very stable assets,
Mm-hmm.
and that allows Berkshire to invest that money into businesses, into stocks, into Apple, into other companies that Berkshire owns, and that's really the secret sauce of. And it's almost cost-free money. It's like going to the bank and saying, "Hey, I want a loan for $1 million," and the bank says, "Oh yeah, we'll just give it to you and let you use that money." And in fact, you don't ever have to pay it back, but there's still an IOU that you owe us that money, but you never have to pay it back. And
Yeah.
that's kind of what Berkshire has. They have this cost-free float that's over $100 billion, and
Yeah.
they can turn around and invest that money. So it's really and Berkshire is the most well-financed insurance company in the world. They're
Mm-hmm.
very conservatively financed, strong balance sheet, and so that's the secret sauce of Berkshire, but it's really
Yeah,
great.
and
Yeah.
Ajit Jain is as we identified and Warren identified, vital to that. Okay, Brian, we've got takeaways from the meeting because we could talk all day about Burke's meeting, honestly.
Yeah.
But so I'm going to just pepper you with kind of some takeaways we took, and I just want to get kind of quick thoughts on it. Okay, I'm going to separate it between the practical takeaways I took and then the philosophical ones. So, practical. Burke is one of the strongest financially positioned companies in the world.
Absolutely true. Um, Berkshire has very little debt. If you look at their balance sheet, Berkshire has very little debt, and they have lots of cash. We talked about the cash in the insurance company. And then they also have cash outside of that, where they have over $130 billion in cash in treasury bonds and things like that. Buffett calls it a bazooka. He's ready to shoot that bazooka at any time if a big opportunity comes along. And they're using some of that cash right now to buy back Berkshire stock.
Yeah.
But the debt that they do have is not an obligation of the corporation of Berkshire Hathaway. They have two companies that require a lot of. They're very capital intensive. One is the one is the railroad company, Burlington Northern Railroad, and that company requires a lot of capital to reinvest back in the business, which is great because Berkshire can get a good return on that money. It's not like they're not getting 20% return, but they're getting it's regulated industry, and they earn a good return on it. It's like 8 or 9%. And then the utility business, they own a company called Mid American Energy, which owns our local utility for power, which is Rocky Mountain Power. It's in the Northwest, Utah, Idaho, Washington, and those are both very capital intensive businesses. But that debt sits on those balance
Yeah,
sheets,
it doesn't go to the whole
it's
company.
not at Berkshire. So there's no obligation for Berkshire there. So if you look at it that way, Berkshire has a very strong balance sheet, very little debt, very conservatively managed. Buffett's always said that he will have at least $30 billion in liquid assets, cash, short-term treasuries at any time, and that gives them a very strong balance sheet.
One of the things, and he kind of made light of it, but it's material. Sitting on 130 billion in cash, a year to 2 years ago, they were making because they. Here's the thing: Buffett did the exact opposite of what some of these banks did. Unfortunately, is he stayed in short-term treasuries. So he was like, we were making 5 to 10 basis points on 130 billion. Well, now they're making 500 or 550 basis points. So you're talking 6 to 7 billion a year coming off of that just in treasuries
Yeah.
alone. And obviously they're waiting for opportunities. That leads to the other practical point is They identified that there will be opportunities in the market, but it's harder for someone the size of Berkshire to have meaningful opportunities.
Yeah, that's true. I've heard Buffett talk about this really for the last ever since I've been following Buffett, probably for the last 30 years. When you're managing large sums of money, and in the case of Buffett, we're talking hundreds of billions of dollars, there's not many opportunities out there that can move the needle. There's very few.
Yeah.
It's really, really big ideas. In fact, Berkshire's biggest investment, or one of their biggest investment, is Apple, the biggest company in the world.
Yeah.
And now, there are a few things that will move the needle, but it is limited. Berkshire can't go out and buy a one or two or even a $3 billion company, and it's going to move. It's not. It won't
Yeah,
move the needle.
which leads me, and there's some assumption here that probably one of the best things they can do with their money is repurchasing shares, which is
Exactly.
obviously super beneficial for existing shareholders.
Yeah.
So the fact that they don't have insane opportunities, now a COVID or something like that creates opportunities, but when the government comes in and backstops, when you're competing with the government, you're not going to win that game normally. But I actually think that's bullish from the sense that makes sense for them to repurchase more and more stock.
Yep. Yeah, that is a great way that Berkshire can benefit shareholders with all that cash, and that does move the needle.
Yeah.
If you think that there's a company that has 4 shares, and so the shareholders in total sum own well, let's say there's 4 shareholders and 4 shares, and we remove one of those shares, and now the remaining 4 shareholders, instead of owning 25% each, they
Own
they
33%.
own a third of the company.
Yep.
So that is the benefit of Berkshire. So a third of the company, a third of the profits. If there's ever a dividend in Berkshire, a
Yeah.
third of dividends.
Just by not doing anything and allowing Burke to repurchase shares, we become, as shareholders, own more and more of this great business.
Right. I want Berkshire to buy a lot of stock.
Yeah,
back.
that would be good. Okay, next practical takeaway. It didn't sound like they think there are a lot of great opportunities in regional banks. Now, we'll look at their 13F, which will come out really soon, but that was the takeaway. Is I was wondering, with the regional banks getting slammed, if they had their eyes wide open as, hey, there's going to be some good opportunities. We didn't get that feeling from them at all.
Yeah, and I think that's really the mindset of Buffett. He's not a speculator. He's looking for, they both, in fact, Munger and Buffett talked about, they want the easy ideas. It's the slam dunks. And regional banks is not easy. There's a lot of question marks, and they're very not skeptical, but cautious.
Yeah.
And if they don't have really high confidence level, they're just going to stay away from it, no matter how attractive it looks. And that's just Buffett's attitude. They're looking for easy slam dunks, and regional banks is not an easy slam dunk. There might, and in fact, I would bet we'll look out 3 years, 4 years, 5 years, and there'll be some incredible opportunities, but it's hard to determine what those are, who those are.
Concern about China. They walk the tightrope of making sure that they didn't say any defamatory statements against China, against the Chinese government, because they obviously know there's consequences to that. But at the same time, you could tell there was an extreme caution. They talked specifically about their investment in Taiwan semiconductors and then getting out of it very quickly afterwards because of the geopolitical tension. It sounds like they're cautious on China and even divesting things, trying to get out of there.
Yeah, they own a business called BYD. It's one of the largest EV battery makers in the world, and they bought it in 2008 for $200 and some odd million, and it's worth several billion. I mean, it's been an incredible investment, and that was a Charlie Munger. Charlie kept nudging Buffett to buy it, and Buffett, I think it took him a long time to do it, but he did buy it, and it's been good. But they've been slowly divesting that investment in China, so they are concerned. In fact, I've heard Charlie, he's been a big believer in China and the work ethic there, and what's happened over the last 30 years in China is really a miracle. But there's some caution there. There's been a shift, in what's happening in China, and then also Taiwan Semiconductor. Buffett just says we reevaluate it, and we're just uncomfortable with the political situation there, and I agree. I'm uncomfortable with it as well.
Yeah. Okay. Um, Philosophical, and this is actually what I loved probably the most about it. But we'll start here. They did talk about government. They expressed they weren't critical. And what praise the individual,
He says praise by name
name,
and criticize by category.
and that's what he did politically. He
Yeah.
did not. He didn't. He praised Powell. He criticized government in general, but both of them talked about spending, spending, spending. It can't go on, and that was more philosophical. But talk a little bit about that.
Yeah, Munger's really strong on this issue and really bold, and he doesn't kind of pull a lot of punches. He's very measured on what he says, and less so than Munger. But yeah, they know that there are negative consequences with all the spending. They don't know when and how that will play out, but it's not good.
Yeah, and they said we don't want to find out what
Right.
that limit is. There is a limit. We don't want to find out what that limit is. But it also, to be clear, it didn't sound like they think that limit we're like close to it and teetering on the edge or anything like that. But they did say, hey, that's a concern. It needs to be addressed, and hopefully Washington can get its act together and address it at some point.
Well, I think we're experiencing some of the issues that with a lot of spending
Yeah.
right now, and that's inflation.
Yeah.
I don't think it's really a risk, and Buffett's talked about this. People worry about the U.S. government defaulting on their debt. That's a very, very low probability, especially when we issue our own debt in our own currency. That's where countries get in problems when they issue their debt in other currencies, and that's where you've seen in South America a lot of countries default on their debt. But that's unlikely in the U.S. But we're dealing with inflation, a lot of excess spending, and that's the problem. We might have higher costs of, higher inflation. It's going to cost more to buy a home because of high interest rates, and I think that's maybe what we're dealing with right now.
Opportunities come when other people do dumb things.
Yeah, I love that one.
That was one. That was one that they said early on, and I think they're talking about emotional, just getting caught up in the wave and doing stupid things. And we look back over the last few years. I mean, NFTs selling for $60 million, or cryptocurrencies, like especially just created coins. I mean, Bitcoin and Ethereum is one thing, but these other coins that were just crazy created, having 100 billion market cap and then going to zero. And but then in the stock market, just quick takeaway: opportunities come when people do dumb things.
Yeah, and that's always been the case, and that will always be the case. People will continue. It's human nature. We do dumb things from time to time, and we go from, and Brett's talked about this, where we go from a stage of euphoria, nothing could go wrong, and we can't lose money, and then all of a sudden doubt starts to creep in, and then the
Market goes down.
and the market goes down, and then nothing can go right, and we go. This is just human nature. We go through these cycles, and we've seen it so many times before. It was interesting as I think about our podcast over the last several years. I remember talking in our podcast several times. Yeah, this kind of reminds me of the .com boom and bubble in the late '90s, but it's different when you're going. Excuse me, we're going through it.
Yeah, for sure.
And yeah, you see it, but you now in a rearview mirror, you're looking like, wow, that was crazy. What were we thinking?
What were people thinking?
What were people? Now we're fortunate enough, and we feel like we avoid that, a lot of that, and so yeah. But it's definitely stupidity creates opportunities in financial markets.
Yeah. Charlie was big on this one, and I liked it. There was an exchange where Charlie was talking about toxic people in your life, manipulative people, selfish people, just toxic people. Get them out of your life. Just get them out. And then Warren chimed in and said, try to do it tactfully, which I thought was good. But yeah, just talk about that. I mean, their take on toxic people, whether you're talking about your personal life or your business.
That's one of the things I love about Charlie and Warren is they have really good I mean, they are good people.
Yeah, and they're principled.
They're
I
very,
really think they're principled people.
very principled people. We may not agree with their views on some of their politics and things
We
like that.
don't,
We
for
don't.
sure. We don't
Yeah,
agree with them on everything, but I think at the core there are some fundamental principles that they're trying
but
to guide their
their
decisions.
core is they have really good, strong, fundamental principles, life lessons. And I've been following Charlie and Warren for 30 years now, and I've picked up a lot of things from them over the years. And you're going to talk about one that a little saying that I've loved and heard before that I think it's wonderful. I think it's great.
It's interesting being there. You're in an arena of, I don't know, 15,000 people, 18,000 people, whatever it holds. And there's kind of two. I was sitting there and looking at the people. There's one kind of form of person is investor who has like an immense amount of gratitude to these people because they've helped build their wealth. I
Mm-hmm.
mean, people have gone and bought Berkshire Hathaway. I mean, when they would question and answer and they would say, I've owned your stock since 1992 or, whatever. And you realize that these people have put kind of, I don't want to say their livelihood, but a large portion of their retirement and everything with them and trusted them. And they've done a great job of that,
Yeah.
of growing it. And so there's an immense amount of appreciation and gratitude. But then there's also the type of individual or the feeling of people coming to try to get life lessons and advice from them.
Oh yeah.
It kind of like going and listen to your grandparents or something
Right.
to get some wisdom because of what they've seen and experienced through their lives. There's absolutely no substitute for experience in this world. And the both of those men have a lot of experience, and you can tell people want to get some of that wisdom. So they appreciate the practical and the financial, but I think they appreciate just as much the philosophical that they give. And that was the last one. My favorite quote of the entire thing was Buffett saying, well, what kind of life, what kind of person do you want to be? We'll write your obituary and then reverse engineer it and go live it.
Yeah.
If you want people at the end of your life to say he was honest, he was hardworking, he was a good husband, he was a good father, whatever you want people to say, which I think those people, those things I just said are generally what people want. Well, go write it down and then go live it.
Yeah.
And I thought, what great advice for a world that has a lot of complicated issues right now. Just decide the person you want to be and then go be that person.
Yeah, I love that quote. Since we got back, I've quoted that to my wife and friends, and I've done that several times. I love it. It's great advice, and yeah, there's just a lot of good advice coming out of Warren and Charlie. Just life lessons that are great, and I've really appreciated.
That's what I challenge. I actually I work with like the teenagers in our neighborhood and at our church, and I'm going to do an activity where I'm going to be like, hey, you're all going to die tomorrow. What I want you to write your obituary and then challenge them to go live it. So that would actually be my invitation to Iron Gate listeners is from Warren via Spencer Nelson, but originally from Warren Buffett. Go write your obituary, reverse engineer it, and live it.
Yeah.
We'll continue to kind of probably. Have you rewatched the annual meetings yet?
Not yet.
And we'll probably rewatch it. But great takeaway: a celebration of capitalism, of America, of a great company, and then getting some wisdom from Grandpa Warren and Grandpa Charlie, if you want to say it, and taking it from it. But it was a really good visit. And once again, those ribs were phenomenal.
They were wonderful.
Yep. Thanks for listening. And until next time.